Okay. Unit 1, Topic 4, Understanding Financial Statements. So there are three types of financial statements to understand: the balance sheet, the income statement, and the cash flow statement. But to understand these in this unit, we will first have to learn some key terms. So asset is a property or cash owned by a company. Liabilities is the amount of debt that the company owes. This could be a result of long-term bank loans or purchase made on credit. And equity is the income or profit that should be given back to investors. We also sometimes call this the shareholder's equity. So in a balance sheet, asset always equals liabilities plus equity. It is called a balance sheet because of this definition. There's always a constant balance between the two. And balance sheets are useful because they indicate the financial position of the company. So how we use the balance sheet to analyze the company. We often use sometimes called the current ratio. The current ratio equals the current assets over current liabilities. And by current, it usually means the company's asset that they can liquidate in a number of 1 year. And the current liabilities are the debt that a company owes that they have to pay off in the time duration of 1 year. So the current ratio shows whether or not the company can offset its debt in the short term, in this case 1 year term. The lower this ratio, the more risk investing in this company is, and the opposite stands true. So the current ratio is one of many ratios to measure the financial state of a company. You can get a lot of these other ratios online. There are plenty of them, and once you understand all three of these statements, you should be able to use them easily. So this is the Starbucks 2020 quarter 2 balance sheet. And here you can see this is the assets. Over here, they record the liabilities and shareholders' equity. And you can see how these always balance out. Over here, for example, March 29, 2020, the total assets is $27,478.9, and it's the same here with the total liabilities and shareholders' equity. And so if you want to calculate the current ratio for March 29, 2020, it would be simple. We would take the total current assets over here and divide that over the current liabilities over here. And that would give us a ratio of 0.7. This indicates that an investment in Starbucks is fairly risky and leveraged, as they are not able to pay off their short-term debt. Okay, let me move this here. Alright. So an income statement is used to show the net income of a company and the details of where that profit or loss comes from. So an income statement is usually split into three categories: the gross profit or net revenue, the operating profit, and the net income. The gross profit stands for all the money the company made, excluding expenses. So this would include operating expenses, such as salary and asset depreciation. So after that, we would get the operating profit. So the gross profit after deducting the operating expenses, we get the operating profit. And the last category is the net income. We get that after the operating income profit is deducted by all the expenses such as tax and interest fees. The net income is the income that the company gets at the end. So if we look at for example, if we look at the Starbucks corporation earnings over here, statement of earnings, which is basically an income statement that they have, you can see that they have from the start a total net revenue, which is the amount they begin with, and then the operating income after deducting all the expense fees, and then we get, after deducting all the tax expenses and interest expenses over here, we finally get the net earnings attributed to Starbucks, which is basically their net income, excluding, of course, the part that they give to shareholders as dividend. Now we move on to the cash flow statement. So the cash flow statement is important as it shows the amount of cash left in the company and how cash is used and distributed in the company. And unlike any other statement, we usually we focus on cash in this statement and we split it into three categories: the operating, the investing, and the financing. We put the, and with the cash flow statement, it is important to note that we usually start with an opening cash balance, show all cash transactions, then close with the closing cash balance. And then we can see that in action over here in Starbucks Q2 2020 cash flow statement. So over here, it's a list of all the operating activities and cash expenditures that Starbucks went through this year. A list of all investing activities here, and a list of all financing activities here. And over here you can see the beginning of period cash flow, so the opening balance of the cash flow statement, and the end of period cash flow, so the closing balance of the cash flow statement.